This new DeFi crypto has been absolutely exploding in the past 3 months. It launched back in late 2023, December of 2023. And here, as we flip the page to 2024, SYNCUS DAO is literally a new standard of treasury backed DeFi. And we're going to break down exactly what they're doing, why it's so unique, and why the chart looks so bullish right now for SYNCUS DAO, and why they're so different than any other competitor out there. So, appreciate you guys for stopping back by the channel. And let's not waste any time. Let's jump right into SYNCUS DAO. And 7 hours ago, they just announced their borrowing and lending platform is live on ZK Sync. You can currently earn a risk-free APY of 250+% and farm an additional static 25% APY in Sync by depositing. Now, let's break down exactly what makes this so interesting. Keep in mind right now that supply APY will decrease as more people are depositing. It is based on supply and demand mechanics. This is the final tweet in the thread. Be wary of accounts impersonating SYNCUS, even with a gold badge. You have to be careful with that all over social media now. But with that being said, let's talk a little bit more about SYNCUS and give you guys the breakdown. We're going to come back to the dashboard here in just a little bit. But what I want to start is over on the documents page. I want to give you guys the breakdown of what this is. So SYNCUS is a treasury-backed DeFi protocol, very different, by the way, than some others, that is designed to be the cornerstone of a new economic system on ZK Sync, which we just announced there. As we've talked about, their platform just went live early this morning on ZK Sync. Keep in mind, this is hyperscaling Ethereum with ZK Tech. You guys may have heard about this before. Massive, massive initiative. So with that being said, let's take a look at their tokenomics. For SYNCUS to start its flywheel, there needed to be an event to gather initial liquidity and supply. So here's what they did. They did a fair launch back in November 25th, back in November 2023. The actual amount raised did not matter. As such, the IDO was held as fairly as possible, being open to all users and only lasting about 5 minutes. In the first 5 minutes, 188 ETH were committed by 276 participants at an average of 0.7 per participant. The protocol's launch date then was on December 5th, which we talked about there. We're going to take a look at the chart. Wait till you see this thing and how it's performing. With a backed price of 0.0001 per token. Okay, 301 was the token price. Now, with that being said, token information. So there's Sync. It's on the Ethereum. There's the chain contract for Ethereum, and there's ZK Sync as well. Total supply equals the circulating supply. As you guys can see here, we've got 4.1 billion. All Sync tokens are in circulation. It's important to note the IDO sold half of the supply. The other half was used as liquidity. Available Sync markets right now: Ethereum on Uniswap, ZK Sync, Sync Swap, and then centralized exchange over on Mexi is the markets where you can buy Sync. Now, staking or LP Sync at SYNCUS DAO. Stake Sync on Ethereum, and you can also LP Sync on ZK Sync. You can, if you want to stake, check this out right here. You can connect your wallet. Total staked right now, 25 million right now. Sync staking right now, 5 hours, 41 minutes to the next rebase. APY right now, 78.5%. Now, there's a reason why this works so well and what they're doing. And we're going to get into that a little bit deeper here as we break down more about what they're doing. So, you go back here to the papers here. So vision here. Let's dive into the vision. SYNCUS mastering treasury token dynamics. So the previous bull run was a pivotal era in the crypto market they're talking about here, especially for DeFi. We had the DeFi summer. New territories of decentralized finance were discovered with a lot of experimentation. Unfortunately, a lot of mistakes were made. A lot of game theory had not proven the test of time. But that's what we need to that's what we need to do. It's necessary in order to find out what works. Prime example is Olympus DAO. It promised high yields on staking, funded by unsustainable bonding activities and dilutive staking process, leading to the DAO's decline. It stands as a classic case of a great concept facing the challenges of execution. Olympus DAO emerged as the groundbreaking project in DeFi back then, aiming to create a decentralized reserve currency protocol with its native token OHM. Olympus had a couple of obstacles in growing their reserve-backed currency. how to increase the total amount of OHM tokens while making sure each one is backed by the treasury. Olympus would distribute new tokens to stakers as the treasury grew, offering high APY from the treasury surplus to make sure each token was backed exactly to $1. Using this APY, the protocol could garner attention to the token. However, as the APY depends on the treasury surplus, the treasury would need a way to grow as well, raising the question for Olympus and its forks, how do we grow the treasury? Olympus opted for bonds. They often traded at a premium above its real value due to the demand for the APY. Bonds allowed direct OHM purchases from the protocol, with the premium acting as the profit for the treasury, which was distributed as yield to stakers. However, to incentivize bonding over market purchases, bond discounts were introduced. Now you could purchase bonds at a discount and sell them on the market. This would cause the price to crash, as bonds could always be bought for cheaper and sold on the open market. Therefore, a locking period was implemented. So as a consequence to all of this, they had some big issues. The flywheel is actually not complete, as an increased demand for tokens doesn't necessarily mean more bonds are sold. One of Olympus's big mistakes. The problem was that Olympus's staking was so profitable that the demand for bonds was low. Okay, so now let's get into the mechanics of SYNCUS. So learning from this, the demand for sync will come from the APY being high. Okay, before we reach a significant market share, the demand for sync will come from the APY being high. As we learned in the first chapter, the way to grow and sustain the APY is to grow the treasury. So the ultimate question for SYNCUS also becomes, how do we grow the treasury? It says here, we have shown that bonds are dilutive and cause issues for holders. However, if we remove bonding, we can't sustain a high enough yield to offer an attractive APY. Investments wouldn't be possible in the beginning and don't sustain a high enough yield to grow the market share of sync. Liquidity provision is also a low revenue activity. Ideally, we would have a mechanism that captures value from the demand on sync whilst not letting it be extracted by the third party. So they came up with a big change in the DeFi landscape. Hopefully you're with me here. I know this is kind of heavy stuff, but sync is very interesting. It's actually pretty straightforward, but it is kind of interesting to hear the backstory. So they're combining the mechanisms of taxation with Olympus's treasury distribution. They've created a revolutionary token that will grow its underlying treasury in the most efficient manner. SYNCUS will introduce protocol taxes for each action, such as buying and selling, using them to fund the treasury in order to produce real yield to stakers. Sync will fully capture the value for the attention the token garners, creating a flywheel effect similar to that of Olympus DAO, only this time it's a more sustainable one. High yield, more demand, volume, treasury growth, more yield, more demand. So, why SYNCUS? The majority of TVL in crypto is on Ethereum. There is no doubt that it's the largest pool. However, the downside is that gas fees are extremely expensive. I witnessed that today when I tried to swap $800 and they wanted me to spend $274 for an $800 swap. No, thank you. Despite Solana's recent rise, the TVL is not caught up to that of Ethereum, not even close. While trading volume on Solana is high, the TVL has not increased significantly in relative terms, showcasing that people would rather speculate in the short term on tokens available to trade, but not for the long-term holding. A similar comparison explains why people choose banks over hiding cash in mattresses for their savings, despite banks' flaws and their slow transaction speeds. But the blockchain solves that. The blockchain trilemma in achieving decentralization, speed, and security simultaneously has been a persistent puzzle, although some are doing better than others. Other chains simply do not have the same level of security of that of Ethereum. That may be cheaper. They may be cheaper or faster, but they are not ever nearly as decentralized or secure. You have layer 2s. The solution is L2 chains built upon Ethereum. Utilizing this, while being fast and cheap, are what L2s offer. It is the solution to the blockchain trilemma. Although transactions are cheaper, they suffer from a lot of the same problems. Here is why ZK Sync comes into play for SYNCUS. It offers the same security of Ethereum, as it's an actual layer 2 that people find important with their assets. Security of funds cannot be understated. It is the primary reason why Ethereum holds the majority of the crypto ecosystem's TVL. SYNCUS is strategically positioned to tap into Ethereum's large pool of liquidity and idle assets, the largest in crypto. If you combine assets from all other blockchains together, Ethereum still has the majority. That is how much of the monopoly Ethereum has compared to other chains. Even if SYNCUS extracts a small percentage of Ethereum's total TVL, it'll be priced sig significantly higher. So when betting on a project, you're not betting on the current product's team, marketing strategy, or anything like that. Market change, people change, etc. These are the people you trust to navigate and hire people in this ever-changing market. Our journey began working on Zigzag Exchange, a trailblazing exchange and utilizing zero-knowledge technology. This was back in 2021, and this is the same SYNCUS team that is now here. So if you truly believe in ZK Sync and zero-knowledge proofs will be an important player in the future, then SYNCUS could be something for you. Our goal is to corner and own the ZK Sync ecosystem through first movers advantage. If we kind of scroll on down here, I want to come to this last point. SYNCUS mastering the game theory in DeFi, beyond the prisoner's dilemma. This is a big, big stepping stone. And in SYNCUS, actions that might seem detrimental are structured to benefit the DAO. This creates a win-lose situation where the DAO invariably benefits. Long-term stakers of Sync who can take loans against their holdings to solve the HODL contradiction, where you gain infinitely but are never allowed to realize the gain, are positioned to gain from short-term speculators. This dynamic transforms SYNCUS into a kind of decentralized casino, if you will, where the house, in this case the DAO, and its long-term participants always win. Long-term, Sync is a bet on a new paradigm, the collapse of the traditional banking system as the masses wake up to the truth. Short-term, it's a bet on humans gambling on this fact, and it's very interesting. And I decided to jump into this project, and I did stake all of my SYNCUS tokens as well to kind of see this theory through. It could be an interesting one. I'll leave all the links down below, guys. And, oh, yeah, check out the chart. The chart is moving like crazy. We're up to a $28.5 million market cap. So for those of you are interested in the price action, and we got $2 million of volume coming in here, looking pretty solid. So appreciate you guys. As always, I'll leave all the links down below. Catch you in the next one. Peace.